Good afternoon, traders. This is Christian from Tribeca Trade Group, and today is the last trading day of September, end of the quarter. So congratulations for making it through. What a month it's been. When we look at the numbers, which I will just bring up in a second, first, the risk disclaimer that's in front of you, everything that we're going through is for information purposes only, not giving out any advice or recommendations. Everything that we're going through is for education purposes only. But let's go ahead and I'll bring up my spreadsheet, which I'll try to zoom in so maybe you can see that. I know it's some of these videos on YouTube, it takes a while to render them depending on how long the video is. So just bear with it. If the screen is blurry, it's just because the high definition version of the video hasn't completely finished going for YouTube. But yeah, so I zoomed in there a little bit, but S&P finished down at 9.6% for the month. The small caps finished down 10%, even though they actually outperformed a little bit towards the end of this week. The transports were down 14%. The Qs were down 10%. There was not really a lot of places to hide. Bonds, TLT down 8.4%. Gold on a relative basis outperformed, down 2.9, just didn't go down as fast, down 2.9%. And the US dollar, of course, which is the big headwind that we have right now, along with bonds, yields are finished up 3.6%. Growth versus value, both horrible, but growth did worse, down 10.6% versus value down 8.5%. Let's see, what else do I have in here? ARC finished down about the same. The IBD 50 ETF actually finished worse, down 13.6%. I know that they do a lot of rebalancing in that ETF, and maybe they just kind of got caught in some of the sectors that started to kind of give back profits. IWN, IWO, about the same thing as, so that's the small cap growth value that was down a lot. Here's the sectors for the month, and I sorted this by monthly return. Pot stocks, wow, down 22%. Chinese internet's down 17%. Clean energy, horrible month, down 16%. Telecom stocks, transports, which we mentioned already, oil and gas, energy, couldn't hide in that this month. That was down 14%. The semis down 13%, just walloped some of these areas of the market. What actually did well? The gold miners for the month were up 1%. Healthcare stocks did decently comparatively to everything else. Again, you have to kind of say, you have to have a relative understanding of what the averages were down, but the XLV ETF was down 3%, biotech down 5%. The banks actually, again, on a relative basis, outperformed because they were down about 6%. Medical devices were in there too, and the home builders. Again, you would think that would be maybe the worst thing right now, and again, bad performance. That was down 7%, but did better than XLF. So kind of interesting in there in terms of, well, that's the month in review. So I will say this, right? If you made it out of this month, right? And if you're depending on how you trade, every trader is a little bit different. If you're more of an investor and trading more on the long side than anything else, then if you got through this month and if you had some losses, but didn't really hit your account that bad, then I would say congratulations, good job, right? Because September, we know, and something that I've been talking about since mid-August, I hate the month of September always. As long as I've been trading now, I just hate the month of September. And it lived up to the hype, right? It's the weakest seasonal month, and I'm pretty sure that September was the weakest. Living up to that, right? No surprises for this September. It was the weakest month of the year. I'm pretty sure. We basically went straight down all month, except for a little bit of in between before a couple short covering events. All right, and so that's where we are. So I'll say this: like, whenever we get through a difficult period, review what you did. that kind of gave you the performance, whether positive or negative. If you were trading on the short side, you probably did pretty well in this market, or trading a little bit of both sides of the market. You probably had some better performance than what the S&P did for this month. But I will say this, regardless, right, of what you did for the month, or even for the quarter, or for the so far this year, reviewing the review step is very important, right? I do that every month for the Tribeca Trade Group members. I talk about overall, like how I did for the month, and I'm down about 3% for this month, maybe 3.5%. I'll look at the my E-Trade account, which I do my trading out of, doesn't compute the numbers till tomorrow, but I can figure that out after the close. So I may actually report that tonight, and then can basically wipe the slate clean and get ready for the rest of the year. So that's where, so as dismal as this is, and I'm going to talk more about some of the negative. Don't worry, if you want to hear more negatives, I will talk some more negatives other than the performance. But I'm also going to talk about what to kind of, where to kind of focus a little bit for the rest of this year. And I would say, so first of all, let's talk about the seasonality chart, right? You're probably, if you're a regular viewer of my end of day videos, you're like, oh no, here he goes. He's talking about seasonality again. I do this too because not everybody, sometimes I get repeat questions from members, and sometimes I get it. Not everybody can watch my videos. Sometimes they do go longer than 20 minutes, which is no good. But so I try to keep them around that time. But I do repeat this, here's where we are basically, right? I put the red arrow in there. In terms of midterm election years, this is the seasonality chart of what normally happens in these midterm election years. And thank you, Capital Group, because I've been showing this chart for a while. So the beginning of October could have a little bit in terms of seasonality, right? I'm not saying that this is the only thing that you should be looking at, right? And I don't believe that it's not the only thing that you should be looking at, but it's just one of the pieces of the puzzle. And it's good to know about seasonality because it does get stronger as you progress through October. Again, it's not really the beginning of October, but you could see what happens there. And of course, there's some bumps along the way and so forth. So that's important to realize where you are in this. And then we're going to talk about what we'll need to actually see in terms of signals and so forth. And so we'll just stay with me, but this is not, I'm not saying that this is going to happen, right? That we're going to just rock it up in the middle of October. But all I'm saying is this is history, and it's good to have this in the back of your mind. Okay. So we are here, and let's talk about a few other concepts before we, so let me move away from the monthly performance and talk about, what transpired today. So first of all, today's end of month. I traded things pretty, I didn't put on a lot of risk today because I don't like end of quarter days. There's too many factors that could happen. There's too many things that could happen that you don't know about, right? But there's more often than not, there could be some of these big pension reallocation type trades where they could be buying something, they could be selling something, right? JP Morgan has this collar trade that goes on where they have to rebalance that. There's a lot of those different things. And I hate to tell you, but you're not going to be able to put together all these pieces of the puzzle. You just don't have the information. So I don't like quarter end days. They could be very whippy. I also don't like quadruple witching days too. There's too much volume going on in those days. There's too many moving parts, and you are just not going to know what somebody is doing in terms of, for the S&P rebalance and so on and so forth. So that's my quick thoughts on today. And if you look to see what things outperformed, today gave opportunities to day trade. Here's how I traded today, as I always show all my trades in the end of the, or at least when I remember to anyway. Nothing is 100% because I do forget, but for the most part in these end of day videos, I show you what I traded. XBI was a really nice trade. And I said this like throughout the day. I'm like, hey, this is not the doubles, triples, home run type trades. Hey, this was a day trade. I made some money in it. I'm out of it. Right. And that's, and I think it actually went up to 82, but then the market sold off. So I didn't get the very tippy top. of the day, and we could look at the XBI because that was one of the standout groups, but it finished back at $79. So, when the market, that's been the pattern, especially in the September month, is that when you've got, a nice move to the upside, you can't just sit in it because the market's just too fast. Right. And as soon as it starts to break, it did get up to just north of 82. So I did miss the last 50 cents. It made another attempt there and it made a lower high. Usually that's very telling, and it sure was. And then it broke down. Now, again, putting alerts on things, like I had a trailing stop today. CLX really surprised me. Right. And I even put this on Twitter. I'm like, hey, I'm taking some profits. And then I had a trailing stop on the balance. Right. And the trailing stop went off, which I put in the trading room. My trailing stop was, let's see, where did I put this? CALX. I think it was 63.40. I was doing the our midday session and that went off. So I had some slippage between the stop, but that worked very well. I added to this yesterday. Right at 60.95. So I'm happy to get out of it for profits. And again, normally in a bull market, I would say, hey, you got a breakout. This is very positive looking, but we're not in a bull market. And there's in bear markets, right, there are a lot of fake breakouts, right, and false breakouts. So that's what I figured. That I was like, hey, I got a nice little profitable trade. Let me take it. So today was, I have no complaints about how I traded today. This was pretty good. I followed exactly what I should be doing. I'm also in this RVNC, which didn't give me any reason to sell it. So I left it on. And again, it's a starter position. Right. So this acted well and it stayed up there. It did take out a 1 hour VPOC, right over here, but it hung in there. So I did take a target on that. Right, again, planning out targets. So I took my first target in this, right, from adding this trade yesterday. So again, pleased at the way things unfolded today, even though I'm not wearing a lot of risk. So let's talk about how things unfolded, and then I'll come back to the last thing that I'll probably talk about will be P&L and as well as this week's performers. But here's a couple of things that we're dealing with right now, right? And they're big things, right? So first of all, let me bring up the Eurozone. All right, so they had their PPI numbers that came out. Look at their numbers today. So unfortunately, as much as I don't fully understand this, because we are seeing a number of things go down, but perhaps the jobs numbers, which is the job and wages, are a big portion of these inflation measures, and they're very sticky. And we talked about that yesterday in yesterday's end of day video. The numbers, like every time that we get one of these weekly jobless claims, right, they're not, that number's not going down. It's not increasing, right? So there's no stress in this employment market right now. And that's a big component of this. So again, this is Eurozone, this is not US, but this is going on all over the place. Germany was higher yesterday too. So inflation is still moving up. Their year over year number is 10%, right? So let's go over to the US. Right, and I'll bring up, just so that you have the reference of what I'm referring to, with the initial jobless claims. But look at where they're expected 215, came in 193. So you just have to, there's nothing that we could do about this except for be patient. This PCE deflator, listen, I thought that this number was going to come in, less than expectations. I thought it would come in negative, right? I was showing in yesterday's video all the prices of different things, how they have come off their highs. I think avocados, right? So guac is the biggest one, where it's down, I think it's like 50 or 60% off the highs. But that's not, I guess they're not measuring guac, right? They're measuring other things. And the number is still rising here, right? And the PCE deflator year over year ticked up again. So again, you could try to be an inflation expert, I am not one. I know enough to get by, but I'm not crunching these numbers. And therefore we have to go, we have to rely on what it's telling us. And then of course, the second derivative of these numbers is what the Fed is doing, right? So we've heard all week, right, Fed speakers saying that they are sticking to getting inflation down. So we can only speculate when that ends. Right now, we don't have any information about them changing course, and we're dealing with, as many of them say, still a rising rate environment. I did not trade in the 70s, but I have talked to some people who did or experienced inflation in the 70s. I was, I was born in the 70s, but I don't know much. I was a baby, so I don't remember that. But clearly I've talked to people who were around then, and the Fed was trying to get in front of that inflation number, and what they were doing was raising rates to get the rate higher than the inflation number, and that in turn would bring it down. That's very much what we're going through right now. This of course is short term, right? Short term rates. They are looking at another 3/4 of a percentage point for November, and then maybe another 50 basis points in December, right? This is what Fed fund futures are pricing in, and that's what the Fed controls. Now we could look at this in terms of not just the short-term rates, but if we look at across as we do in most of these videos, we look at what the yields are doing in various different maturities. And you could see that the 2-year rate right now, we've got inversion. The 2-year rate is higher than the 10, 20, 30, and even the 20-year rate is higher than the 30-year rate, which is also kind of odd to me. But it's all over 4% at this point, so rates are moving higher. And if we look at what transpired today, this is ZB again. This is the 30-year bond futures. They started positive on the day. Notice what they did again. They cannot get over the 5-period moving average. Again, this is why I have the 5-period moving average on my chart, because someone is aware of this. Just like when we're trending to the upside, you will see price stay above the 5-period moving average. But look at, again, whoever, somebody is selling this pretty hard, and they know anytime that there is a positive move, they're not letting the candle close above the 5-period moving average. And they haven't done that since the beginning of August. So it's now 2 months that have gone by where you have not seen one close above the 5-period moving average. That's pretty remarkable, isn't it? It's pretty remarkable too how technicals help you with this. Again, it's why I have it in my chart. We've seen various different times, and this is bonds, this is not equities. But again, intraday gets over this, no problem. By the end of the day, someone is in there selling hard, right? And you could speculate on who it is, right? We know that the Fed is, the balance sheet is being reduced, right? Here's what this looks like, which you would think oh, geez, that it must really be coming off. But this gets adjusted once a week. So look at whoops, sorry, I pulled up the wrong thing. Right, they are incrementally selling, but maybe it's people getting in front of that trade. Maybe it's sovereign countries, who are getting out of their U.S. bond holdings. Regardless, somebody's in there selling pretty hard, right? And the worse that this gets right now, the more of a headwind, right? It is affecting equities. Right, so that's something that we've been talking about all month long. Considering that volatility. So where are we now in the technicals? Well, we did take out the lows of June. Let's make sure this video is still recording. Yes, good. All right, and so next on my charts, virgin point of controls, right? We are now that we kind of set this up a little bit, talking about that there was a good chance that the lows would be taken out. So 35.56, and we'll see what happens when we get here. Right, and then the next one is 34.30, 34.42. I think we went over all these levels in yesterday's video. Notice as well 33.24, and it's a very similar looking. And by the way, this is more significant, right? This is the virgin point of control of last year's value area, okay, right, which is based on all the price action and the volume from 2020. Yeah, all this volume profile is from 2020. We draw that volume profile here, and here's the point of control, right? So the most volume that occurred at that particular price. And here's the version point of control. So if we don't hold in here and we don't hold those VPOCs, this could be where we're end up going. Now, what do we want to watch? I mentioned the seasonality, right? So here's, so once we start to get into that better seasonality, right, we're going to have to see confirmation, right? And that, of course, is price and trend. Number one, most important to me, the 5-period moving average, which also same thing, just like bonds. Notice the other day, we stopped right at the 5-period moving average. Not a coincidence, in my opinion. We are trending down. There's no reason to speculate, to me, on the long side here with any meaningful risk until we begin to reverse that. Again, if you are follow the technicals, if you also are a trend trader or know a little bit about trend traders do not pick the bottoms, right? They wait for confirmation. So because there's no reason to speculate on when the bottom will be in, right? You want confirmation that it's actually moving up, right? That's the beauty of trend trading. You're taking the emotion, you're taking all of your, thinking that you have an instinct in this, right? The price is the most important. And I will wait for the price to tell me when things are a little bit better, because I'm like, and I've been this way now for a bit, I'm over 95%, cash in my trading account. All right. NASDAQ, again, we could look at this. I know people like to look at the Qs a little bit more, so you could look at this. Next VPOC down is 258.64. We did break this 200-period moving average on the weekly. 254.70, right? It'll be something to watch. So you could write down these levels. They are very, in my opinion, they are very significant, especially on the weekly chart, which we're getting pretty darn close to. Now, I mentioned this is price and trend are most important. What's next? Well, the other thing that we look at is breadth, right? I talked about in yesterday's video. I said, hey, it really doesn't matter if we take out the lows, because the advanced decline lines have already done it for the NYSE and the NASDAQ. So that is kind of, when you see breadth like that, you know that more names have already taken out their lows of this year. It's just kind of a matter of time when things are kind of leaning down like this, right? So we'll need to see breadth come back, right? We'll need to see more names going up versus more names going down. So these are all things that we'll be very clued into for the next week, for the next month, for however long it takes. It's a game of patience. It's also like playing poker, like a pro poker player plays poker. It doesn't matter how many times that they get bad cards, right? They're going to fold, right? They're only going to play their very best hands. Right now, we're getting a pair of 2s. We're getting a high card, a 9. We're getting a pair of 4s, right? So what do you do with those cards, right? You just keep discarding, right? And you keep waiting. And you wait until you get a pair of aces, right? Or until you get a straight or a flush. Then you can play more, right? Well, that's not what we're getting. High card 8, fold. So that's my analogy for the day, is that we just continue to get these very low cards in terms of playing poker right now. They're not cards to play with just because you're bored and you want to play with a jack, and see if you can outbluff people. You can't outbluff the market. All right. So that's this. We've talked about as well. What else do I have? We talked about the Fed. We talked about inflation, right? We've talked about interest rates. Let me go back to P&L for a minute. So, I kind of talk in the beginning of the video about, now that we'll be in a new quarter, you kind of have to wipe the slate clean a little bit. You still want to learn the lessons from this past month. What were your best trades? What were your worst trades, right? What did you do wrong because of to get you to have those worst trades, right? You want to eliminate those mistakes and you want to improve. Once you've figured out that and you've jotted down those things, then you want to be pretty open-minded going forward and analyze the price action as it comes to you, right? So that's what we'll be doing. And I could tell you for my P&L, I think I already mentioned, but down about 3%. That takes me for the year. I was up 2% coming into September, so I'll be back down fractionally. But it's not the end of the world. Am I happy with a bad month, a negative month? Absolutely not. But it's not really going to, distract me from executing, and I'll be on my toes, right? I really have been waiting for better seasonality, and of course, be on my toes, waiting for those things to kind of turn. And if not, it's just continue to kind of discard and day trade a little bit more than anything else. Play some shorts, right? A number of shorts actually did well for me this month. One of the things that I need to work on is holding the shorts a little bit longer while the indices remain below all their moving averages, right? I can ride those a little bit longer than I did. A lot of the shorts that I did were day trades or holding for just a couple days, right? I was long SQQQ after the Fed meeting, but I took it off, way too soon. I had a nice winner in it, and I thought that we might see a little bit of a bounce, so I took that trade off, right? But so again, these are all things to kind of work on, but I look forward to that. Let me just say, if you're not a member of Tribeca Trade Group, right, and you want to get involved, we will be doing a special for the rest of the year. So you could reach out to me, because I don't know if I'll have that ready for you by hopefully I'll have the link for tomorrow. But yes, be running an end of the month, end of the quarter, end of the year. Sorry, I'm saying that wrong. End of year, fourth quarter promotion, especially for new traders. So I think a great chance to kind of learn how we do this every day, set up the day like we did this morning in XBI. I thought, for example, retail would be the weakest sector off of Nike, and I thought XBI would be the strongest sector today. I didn't really do much on the short side. I was just watching. We were talking about Dick's Sporting Goods, but it moved too much in the pre-market. Like, the move was already made in the first 15 minutes. So I wasn't going to chase this thing down. Right. If you look at this thing, right, we talked about this midday right around 110, right, and it went down to 105, and it actually took out this virgin point of control, which was the exact target. Then what happened? Then the thing bounced pretty significantly. So I don't like to chase names that are down that much. All right, guys, that is it, guys. Have a great weekend. And let's see, was there anything else? Oh, here's the performance for the week. Again, some bright spots in here, but not many. All right. Utilities, that's the last thing, maybe last chart we'll go over, and then we can get to our weekend plans. But take a look at this. Complete collapse. And now at this point, a bigger collapse than what we had. Remember, I was talking about this in the beginning of the week, right? I said that this was about a 15% move. And at this point, it was a 13% move. I have to measure this, but it looks like it's it has to be a bigger move. Yeah, because look at where we stopped up here, but dramatic move. So taking out, one of the best performing areas this year, made a new high. It did not, I guess the RSI did not confirm that on the high. And 77 down to 65 for utilities. You can't hide in these things either. All right, guys, have a great night. Have a great weekend. And I'll see you hopefully in the trading room on Monday.